program is brought to you by Rain-X Wiper Blade.
Go to a fallout shelter, then turn on the radio.
Nothing's happening.
The noise that you hear at the moment across an immense ethereal gulf.
What you're about to hear
You hear it?
is the fusion
There are only two sides.
of entertainment
Tell me who's that first.
Jack Benny. Bob Hope.
and enlightenment.
Let me assert my firm belief
Of the humanity.
The next generation of talk radio.
That's it.
From Radio City.
This is the Glenn Beck program.
And the time has come.
From Radio City in Midtown Manhattan, third most listened to show in all of America. Hello, you sick, twisted freak. Welcome to the program. We have Peter Schiff on the phone from Euro Pacific Capital, and I wanted to get Peter to explain, first of all, what happened last night. We had all of the futures markets freeze up, and you couldn't buy your way out last night. It was the market's pretty much closed. Is that an accurate?
You couldn't sell your way out if you were trying to sell in the futures because they were lock limit. But it seems like the event that precipitated the decline was a near 10% decline in the Nikkei. And what happened is a lot of the major exporters, right, that export to the United States, came out with some bad earnings numbers, and that clobbered Japanese stocks and also sent the Japanese yen, soaring.
Okay. Peter, remember, this isn't CNBC. This is not a financial show at all, so if you can break down everything as much as you can. Why were we expecting the market to open and people were full-fledged panic this morning?
Well, what happened is, with all the selling that was happening in Asia, people who trade stocks started anticipating more weakness in U.S. stocks when they opened the following morning, and so people started selling U.S. stock index futures, and that drove them to limit down. And that's what got everybody frightened, because we hadn't seen a limit down move in the stock market. I can't even remember when that's happened.
Okay. So why didn't it shut down and trip? What happened? Why is it now at only
Well, because buyers came into the market, so it wasn't the opening wasn't nearly as bad as people had feared. But remember, the day is still early.
Yeah.
And we could still go a lot lower. I don't think people keep bringing up people who bought in October 1987, they made a lot of money, so people should just come in and buy, and the same thing is going to happen. But the big difference is, in 1987, we were still in a bull market. The bull market began in 1980, and it went until 2000. So that was a correction in a bull market. Now we're in a bear market. We've been in a bear market since 2000. So buying a big dip in a bear market, maybe it would work for a trader, but for a long-term investor, stocks are going to continue to lose value over time.
I have to tell you, Peter, it's driving me nuts. People will watch these traders and these people on television, and they're salesmen. I mean, it benefits them when they say, "Hey, you're getting in." I mean, I had people say on my show, I think you were on the same show with me on the day when the Dow came close to hitting 14,000, and people were saying there's lots of room left in this thing, and I'm like, you're out of your mind.
Of course, look, you're not going to walk into a used car lot, and the dealer's not going to tell you not to buy any of these cars. I mean, that's the same thing that goes on in Wall Street. They want to sell stocks, and no matter what the price is, it's always time to buy.
Okay, so
and it's either a bull market or it's the end of a bear market. I mean, it's always time to buy if you listen to Wall Street.
All right, so Peter, if you had a 401k or if you had anything right now, what should you, if you had a financial advisor and you got him on the phone, what would be the tip-off that your financial advisor got it? What are the questions that you should ask, or what would be the telltale signs?
Well, look, they'd have to understand that the U.S. economy is a complete disaster, that in the future it's going to look nothing like it did in the past. Therefore, corporations, many of them are not going to earn the type of money that they used to earn. Many companies that have been here for years are going to go out of business. Earnings are going to collapse. And stocks are going to be worth a lot less in real terms than they are now, and that riding this bear market out is not a good idea. So he'd have to basically give you some whole new ideas to try to reallocate your portfolio for the way the world is going to look, not the way the world used to look.
Okay, how much of a role are the hedge funds playing on dumping their assets. For instance, gold. Gold has been.
I think they're playing a major role because right now everything is going down, regardless of the fundamentals, regardless of the value. People are selling whatever they bought with borrowed money, and since we had thousands of hedge funds. And also, it's not just hedge funds. You also have mutual funds and other investors that are all simultaneously trying to get out the door at the same time, and everybody is selling. And, of course, you've got fire sale prices. But the U.S., the Dow is not on a fire sale. I still think many U.S. stocks are expensive, even after the decline, considering what is likely to happen to their earnings. But I think people who still hold U.S. stocks, one thing they can do is when they're selling their U.S. stocks, they can go and buy some of the stocks in other countries where the valuations are a lot better. And you have to remember what's actually going on right now in the global economy is the countries that loaned us a lot of money are having financial problems because we can't pay that money back. So there's trillions of dollars of losses.
Wait. Explain that. Where have we defaulted on paying money back?
Well, we've borrowed trillions of dollars from the rest of the world to buy houses, to remodel houses, to import cars, to buy consumer electronics, to buy clothing and furniture, to do all sorts of things. Every American has a dozen credit cards in his wallet. He's got car loans, student loan, mortgages. Where's all that money coming from? The money is coming from the rest of the world because that's where all the savings are. And, of course, Wall Street came up with all these products to put together Asian savers with American borrowers and arranged all these cross-border loans. But the world is starting to realize that Americans are not going to be able to pay the money back. We haven't defaulted on it all yet, but people are starting to connect the dots and realize that it's impossible for Americans to pay this money back. They don't have the incomes, they don't have the assets, and so this whole dynamic is imploding. So in the short run, the people who loaned us the money are suffering, but ultimately the change is going to be much worse for us because in the near future, our economy is going to have to function without credit. People are not going to be able to use credit cards and borrow money to buy cars or to buy big screen TVs or to buy furniture. Our whole economy is going to change. And when Americans can only spend the money they actually have, this whole phony service sector economy that grew up around access to foreign savings and credit is going to crumble. But meanwhile, the rest of the world still has a viable economy. They still have all their infrastructure, all their factories, all their savings. All they're doing is losing money on what they loaned us, but going forward, their economies are viable. Ours is not. And we've got a major, major transformation ahead of us. And unfortunately, we know the Obama administration is coming in, and everything they're going to do is going to try to interfere with what the market is trying to do to correct the economy. And we know how that worked in the 1930s. It's not going to work any better now, especially when you've got the printing press nature of our money now that we didn't have back then, and we have the potential for an inflationary depression that would be much worse than the depression that we had in the 30s.
All right, I just said on the air that I'm not convinced that I'm not an economist. I don't know what labels mean and everything else. So I can just tell you that what I said on the air is I've been concerned about a depression. But I'm more concerned of a Weimar Republic at this point. I don't know what the event is. I just know, or what anybody's going to call it. I just know we are headed for a major event, and within 24 months, this country doesn't. I mean, I'm not saying that the country is wiped out.